Today we're going to talk about 21 signs to watch out for in industry trade credit reports. The learning objectives for today are to really understand why it's worth your time and effort and expense to review credit reports and the importance of the credit reports and assessing the creditworthiness of either an applicant or a current customer that wants to raise their credit line. We're going to cover a number of metrics and scores and so on that you should look for. The other thing that we're going to talk about is how to interpret the data in a way that helps you predict what might happen in the future so that you can control any risks that you see as you order these reports. We're going to go into some depth in how do you find reliable sources of both information and credit reports. And again, what to really look for. There's more than just meets the eye as you try to interpret what the various reports are communicating to you, to kind of anticipate what the customer's payment behavior or ability to continue to pay might be. The agenda for today is we're going to talk about sources of reports, types of scores that you should be looking for, and other metrics that are on these reports that are relevant as you're trying to assess creditworthiness of a trading partner. There's other risk indicators that red flag the risk that you should be able to find and interpret as well. So the first thing we're going to talk about are the sources of trade credit reports. You have to ask at the very beginning, why do I even order a report? Because it really helps you predict the behavior of somebody that you're going to be selling to. These reports show trends of payments and other trends of the company's health that are quite valuable to determine if you want to sell to them or how to limit your credit line, limit your exposure if the trends are not doing well. It also helps you prevent frauds because you've already gotten your credit application, you've reviewed the applicant, now you're doing your due diligence and you order a credit report and you can see if the addresses are the same, you can see if the trading partners that they have based on the industry specific reporting you have access to, if they're selling into an industry that really matches what the purpose of that company is. You can also see if other creditors have dealt with this company and end up making third-party collection referrals or have entered in litigation. So it does help you prevent taking on any fraudulent companies. Provide you with very detailed insights as you go really comb through these reports. You can learn a lot about the company's history, the history of the principals, the payment trends, and other things that would be relevant, like other secured arrangements that they might have with companies, etc. So we'll go through a number of these things